No. Oh no, I can't fuck with you. Yeah, when I want my sweat, I cannot do no wrong. Mm-hmm. Mm-hmm. Yeah, we go through some things and things you can't relate. Yeah. All right. Welcome everybody to pre-market charting. Today is Wednesday, June 26th. We are looking at NASDAQ futures. And I guess to start off, let's just delete everything and start fresh, right? So right now we're looking at this chart, NQ. Where do we start, right? This is the daily time frame. So each one of these candles is one day. So essentially, the entire point of this exercise is to identify high probability areas where the price algorithm wants to deliver price to, right? So that's a lot of jargon for essentially saying where is the most likely place that price will go to short term, in very simple words. So the first thing I can see here on a higher time frame is obviously we're in an uptrend, higher highs, higher lows, right? So definitely uptrend. This area right here though, this would be where I would start. This is a 1 day imbalance. An imbalance, a buy side imbalance, sell side inefficiency on the daily time frame. And we can see that price came right back into it, respected it, and started to move higher. Short term, right? What's something else we can see here? There's another sell side imbalance, buy side inefficiency in this area. So let's make it colored all nice. Just keep the midline white. Background. And we can label this the same thing. It's a 1 day imbalance. So clearly, we marked our imbalanced areas, right? What else is there? So these are the imbalances that are being respected by the market. Are there any imbalances that have been disrespected? Maybe that can tell us something. We have this area right here. So that's a buy side imbalance, sell side inefficiency, or a BISI. I'm just kidding. Just call it a fair value gap, whatever you call it. Names don't really matter. Just some sort of inefficiency in the market. The price wants to rebalance. So we inversed it though. So the difference between this guy and this guy, which was essentially before price filled it, was the same thing, is that price completely disregarded it and now it's an inverse fair value gap. So that could suggest that we were on the buy side of the curve, right? Market maker buy model. And now we started to enter a short-term market maker sell model. So this is the sell side of the curve. To rebalance where? To rebalance at this efficiency. Now, are we going to continue lower, or are we going to end this sell side of the curve and start a new buy side? That would all depend. That would all depend on what price does. All right. So the point of this, I'm not predicting anything. I have no idea where price is going to go. I'm just trying to react as a short-term price action trader. I'm just trying to react to what price is doing and put on risk when we have high probability sells. All right. So enough talking. Let's get to charting. So this is the daily time frame. Now we want to drill down. So what's the next time frame down? That's a 4-hour. So going back to that buy side of the curve and sell side of the curve, it starts being much more obvious the lower time frames you drilled down, right? So we took out that high, manipulated past that high. We have a very nice relative equal highs right here. Manipulated past it, and then strongly displaced below low, inversing this 4-hour fair value gap, and creating, now we have the daily, now we can adjust it, that we're drilling down, we can adjust it to the 4-hour fair value gap right here. Created that as soon as we displaced past this low, all right? So here, and I'm going to write it out so it's clear. So here we have manipulation. And what do we get after manipulation? Displacement of a low, creating a fair value gap. Right? And we seem to be respecting it this entire time. And where did we seek? Where did price seek after this displacement? Areas of liquidity. This beautiful relative equal lows down here. So this was our sell side liquidity that price wanted to rebalance. So that sell side liquidity got taken. And now this gap right here, we drew it on the daily. So now that we drill down on the 4-hour, we can refine it, right? So now this is a 4-hour time frame. Same with this guy. Okay, great. So the sell side of the curve starts being a little more clear, right? Let's drill down even deeper. All right, so let's go to the 15-minute time frame. All right, so we want to check on those gaps. And let me take off the sessions so it doesn't overcrowd the chart. So now we want to look at these high time frame imbalances that we marked out and refine them even more on the 15-minute time frame, right? We want to get even deeper. So where is price most likely to rebalance? So we can refine it to this area of inefficiency right here, sell side inefficiency, buy side imbalance, or rather sell side imbalance, buy side inefficiency, all right? And we can see it's being respected. But what are we doing? What are we doing? As we're seeking the sell side liquidity that we're just taking, all right? What have we been doing here? Just generating buy side liquidity, generating all these highs. That's buy side liquidity. Right? All right? Buy stop orders here. That's buy side liquidity. That's buy side liquidity. That's buy side liquidity. This one is even better because it's relatively equal highs here, right? So even more liquidity built up. And look at where we stopped, right? Look at where price reversed on that. It came up, took that buy side liquidity. However, it created another relatively equal high here. So we still have unmitigated buy side liquidity here, potential rebalance up into this area, all right? So this buy side liquidity is still unmitigated, hasn't been taken yet. All these guys are gone, all these guys are gone, all these guys are gone. And what do? We can consider this a low time frame manipulation. All right. As we manipulated past these highs and then strongly displaced below these lows. So it took out sell side, sell side, sell side. So we're taking all that out, strongly displacing, leaving behind fair value gaps. So we're going to look at that, right? But this could be considered manipulation right here. However, the stronger drawn liquidity would be these relative equal highs that up here, all right? So where is the next obvious levels if price wants to keep going down, right? And seek this liquidity. I mean, this would be a pretty major dump here. But let me turn on the sessions back because there is something that is important here. So we took that buy side liquidity, right? And this box that I'm about to draw is our Asia session. So from this area to this area was our Asia session. So we can see a power of three setting up here, right? What's a power of three? Essentially, three market phases during the three market sessions: Asia, London, and New York. What generally happens is you see accumulation during Asia session, so accumulation, highs, lows, right? Considerably tight range. And then you see London session manipulate. So London session manipulates that Asia session accumulation, right? And then what does New York session do? New York session generally distributes in the opposite sides, in the opposite side of that London manipulation. We take out the highs of Asia session during London, and if we reverse and get back into range, very high probability that we're going to distribute to the liquidity draws during New York session. And that's pretty much what's happening here, and that's essentially what they would call a power of three. Again, all jargon. It doesn't matter what you call it. What matters is what price is doing and what we can tell from it, right? So essentially, we mitigated buy-side liquidity up here, still left this major draw in liquidity, relative equal highs, with that imbalance above, right? 15-minute. Well, did we update it for 15-minute? Yeah, we did. All right. What about this guy down here? So we can refine this even more into this 15-minute imbalance right here. Underneath this sell side liquidity. So clear low here, clear swing low. So we're going to draw that out, and that's going to be our higher time frame draw on liquidity if price proves that it wants to continue lower, right? From up here. This is now 15. Put that in a little bit. So these are the ranges, right? These are the ranges that we're looking at on a higher time frame. Now, what we expect to see is if New York wants to continue distributing, taking out these sell side liquidities. So this is the New York session low from yesterday, right? Important level. You already know a bunch of stops are sitting there, as well as the swing low right here. So these are next obvious draws on liquidity, obvious levels of draws on liquidity, right? There are a tiny little buy side imbalance, sell side inefficiency in this area that we're currently respecting, right? As well as an inverse fair value gap here. Boom, inverse. So we're currently respecting this area. I would even drag this up to here, all right? This would be our area. We can see prices respecting it pretty cleanly. We did sweep this sell side liquidity. All right, so that SSL is taken. So strong case to make here if we see some distribution to the upside. Just marking out our inefficiencies here. No efficiency in this area, just over here. So the fact that we just took out this low, still respecting this 15-minute inefficiency, right? Balancing it. If we do get a move above and start displacing above these highs, I would consider a long back up to this range. Short term, right? Again, we look at it from the 15-minute perspective, buy side of the curve, manipulation past the high, displacement past the most recent low. So we start short term, sell side of the curve, into where? Into a high probability area of inefficiency taking out some sort of liquidity. And if we respect here, you can expect a short-term buy side of the curve to rebalance this entire run down, all right? And if we drill down even deeper, we can see all the buy side liquidity levels that we're generating on this entire move down, all right? Buy side liquidity, buy side liquidity, buy side liquidity, all the way up until we get back into this inefficiency. And on the 1 minute time frame, this could be our level right here. This could be our first target. This buy side draw on liquidity. Into what? This 15-minute fair value gap to the downside. So this is how we have to picture price, right? Price is fractal. So we really have to start on the higher time frames and drill down. If I just pull up the 1 minute, it doesn't give me much context, right? I'm executing on the 1 minute, yes, to find the best risk reward entries. However, I'm creating my bias based on the higher time frames. And once I see something that aligns across multiple time frames, that would be the highest probability trade that I could take, and that's what I should be risking, right? These equal relative highs are very, very, very strong draws on liquidity. So we'll see if we respect this area here, slight pullback, rebalance this run, and start pushing back up, displacing above here, rebalancing this area, taking out this buy side liquidity, all right? So that's what we've been looking for. Also, if you consider that short-term bullish run, and let's take off some of the settings so this is clear. So low to high of this range, we were traced right back into discount, right? Equilibrium, 50% of that range. So anything below this is discount, anything above this is premium in context of this 4-hour impulse, right? 4-hour bullish impulse. So good area to be looking for longs at discount, right? And good area to be looking for shorts at premium. That's essentially the entire idea. So yeah, we are gonna have to watch how the market opens. We're about 10 minutes away or so of the 9:30 open. So we're gonna be cautious. We're gonna be patient. We're gonna see if we get some sort of sweep or some sort of displacement from the upside. That's gonna determine which way we wanna go short term. And with that, I wish you guys good luck.